Imagine turning 40 lakh into thousands of crores. Imagine becoming so powerful that entire stock markets move because of your trades. Imagine being called the big bull of India. And then imagine losing everything. This is the story of Harshad Mehta, the man who created one of the biggest financial scandals in India's history. A story filled with ambition, power, greed, and a scam that changed Indian financial markets forever. In the late 1980s and early 1990s, India's stock market was still developing. Information wasn't easily available, technology was limited, and regulations were far weaker than they are today. This created opportunities for smart and aggressive traders. Harshad Mehta understood the market better than most people. He identified undervalued stocks, built strong market positions, and developed a reputation for making bold bets. Soon, investors started following everything he did. When Harshad bought a stock, the market followed, and stock prices skyrocketed. He became a financial celebrity, a symbol of wealth and success. The media called him the big bull. But there was a problem. The extraordinary rise wasn't driven entirely by investment genius. Harshad discovered loopholes within India's banking system. At that time, banks used something called ready forward deals. These were short-term transactions involving government securities. Through a complex network of transactions and fake bank receipts, funds intended for banking operations were diverted into the stock market. That money was then used to aggressively buy shares. As demand increased, stock prices exploded. One of the most famous examples was Associated Cement Companies. The stock witnessed an unprecedented rise. Investors believed a market genius was creating wealth. Few realized the system itself was being manipulated. Everything changed in 1992. Investigative journalist Sucheta Dalal started questioning the unusual movement of funds. Her investigation uncovered irregularities involving banks and stock market transactions. Soon, the scam became national news. Authorities launched investigations. The financial system was shaken, confidence collapsed, and stock markets crashed. Thousands of investors lost money. The man once celebrated as a market wizard was now accused of orchestrating a massive financial fraud. The scam exposed major weaknesses in India's financial infrastructure, but it also triggered significant reforms. Regulatory oversight increased, banking controls became stronger, market transparency improved, and Securities and Exchange Board of India received greater powers to regulate markets. Ironically, one of India's biggest financial scandals helped modernize its financial system. Sometimes, the greatest reforms emerge from the greatest failures. The Harshad Mehta story isn't just about a scam, it's about human psychology. When markets rise rapidly, people stop asking questions. Greed replaces caution, and euphoria replaces logic. History has shown this repeatedly. From the dot-com bubble to the 2008 financial crisis to countless market manias around the world, the pattern remains the same. When something appears too good to be true, it usually is. Harshad Mehta became a symbol of both extraordinary ambition and extraordinary excess. His story transformed India's financial markets forever. But the most important lesson remains timeless. Markets can be manipulated temporarily, but reality always catches up. Because in finance, wealth built on fundamentals survives. Wealth built on illusion eventually collapses. If you enjoyed this case study, subscribe for more deep dives into India's biggest financial stories, stock market legends, economic scandals, business empires, and investing psychology. Because the greatest lessons in finance are often hidden inside the biggest mistakes in history.